Welcome to the StockMeta.com studios in the Black Hills of South Dakota. I'm StockMeta Brian Johnson, and the markets have been getting pummeled by the bears lately. The bears doing a very good job of pushing things down. I was wondering if we might get maybe some sort of a small bounce today, but we did not. Down just a little bit more. Nothing major, but still down a little bit more today. I'm going to do a video anyway. I don't want to get too far, into the week um, and then not get one done. So let's talk a little bit about where we've been. Now, we were in this consolidation up top here for quite a while. 350, 650, talked about that forever. You watched any one of my previous videos, you know exactly where we're at. Once 13,300, 13,250 was broke, it was see you later. Now, actually, we were in a channel right in through here. And we bounced off the bottom of that channel, moved back up, and then dropped right straight down through it. The bears have been very strong these last few days. This is going to start to put somewhat of a damper on the bulls scenario of making new highs. When we get the bounce, that is going to be on the front, probably first and front for everyone from a charting perspective on where we could go next. So I really like the idea of bouncing into the elections. We still could get that. We could still get a pretty good sizable push up into the elections. We're not that, we still have time to start doing that. But I really kind of thought it was going to happen a little bit earlier than this. So here we are into these lower levels. We've broken out of this big consolidation that we were in up here, not to the upside, but to the downside. This was a huge high base formation, and it failed. It all moved down from here, which would not have been necessarily expected. And so looking at a daily, you can see that we have been playing catch up, whereas the rest of the markets were already starting to do this. The NASDAQ was already doing this long before the Dow finally decided to catch up. So lots of red catch-up days. Trying to move back into some of these lower levels. Now, as we move forward, look and pay attention to how many things are starting to get down into their 200-day moving averages. The Dow isn't there yet, but this is something you'd be looking at or looking for going forward. Do not be surprised if we see a bit more downwards action here by the bears. Keep in mind that we just started this move. We had this little hammer sat right below the 50-day. For me, I had some people ask me if that was a reversal candle. No, I did not think it was a reversal candle. It's just it's just a regular candle for me. It didn't mean anything at the time. We got the next day kind of proved it wasn't a reversal candle as we got the big drop to the downside. And now we're looking at the 200 period moving average for our next lower level of support here on the Dow. So if you're a Dow player, I want to say go short down in here. It's up to you. If we can break the 200, sure, that's definitely worth a shot. I don't think I'm calling out any short plays at this point. We're going to see what happens down here in the 200-day moving average. Let's see what kind of a play we get. We had this consolidation. This moved down, moved back up. I really kind of expected it to pull back a little bit and then shoot upwards. That was the look, if you will, I was going for. Never got it. The bears were really, really strong in through here and have kind of now put that on the back burner as we come into now. Now it's going to start to put doubt. From a chartist perspective, you're going to start to see some doubt come into the markets about, well, we thought we were going to get new highs, but now that's kind of like I said, put aside. I'm in the same boat. I'm not so sure. There is the possibility. I told my subscribers this a few days ago. I could get really, really bearish on the markets really, really fast. And I was calling for them to be watching for breaks back below this level right here. If we got back below this, I said, this is your opportunity to get short. And we were looking at the NASDAQ actually and the SPX for our shorting opportunities. But I'm still in that boat. I could get really bearish really fast here if we see some. Look at what we're getting in earnings, guys. I mean, the techs are getting crushed. Google, Microsoft, Netflix, the list goes on of things that are getting destroyed. Have you seen what's happening to Apple lately? It's down from 705 down into the 600 range. I mean, why? Because investors are like, I'm sure are assuming that since all the other techs are reporting poorly, Apple will too. And if it does, look for it to get hammered. So it could easily be a 550 to 575 stock by the time it reports, and I think it's tomorrow. I think it's tomorrow, probably after the close, that it reports. So by the end of this week, it could be a 575 stock from 705 who doesn't want to own puts now in that. So you can see the major change. I need to adjust this thing. This thing's off a little bit, isn't it? Hold on just a second. Sorry about that. My charts were off. I don't know exactly why, but anyway, we should be back on site now as I moved it up just a little bit. Do apologize. So down into these lower areas is what you're going to be watching for 200 period moving averages, 200-day moving averages. This is what is going to be on, well, we're going to see. Look at this. We had, and I'll show it to you. It doesn't show up very nicely here, but the NASDAQ is a beautiful head and shoulders pattern, and we've more than hit that target. Now look at this. Potential, shoulder. If it touches and bounces from here, head, do we get a right shoulder? That will be the one to watch for. So I really like tests of this area. We get any further bearishness in the markets, you need to be watching this area very closely. That'll be definitely the one to watch going forward. Let's move on to the NASDAQ and show you what we're seeing here. As you can see, we're starting to dribble down. Now, this is kind of getting a little wedgy down here. Could be into a short-term bottom. Could be a long-term bottom, but I'd start with a short-term bottom down in this period, this area here. What I'm looking for is pushes back up above these moving averages. If we can sneak our way back up above here, I'll get a little bit more serious about looking at the bulls side of things. But right now, it's still all bearish. And once again, I'm not sure this finds a resolve until after Apple earnings. Apple might be the reason it bounces. Apple might be the reason that it slams itself down. If it does slam itself down after Apple earnings, I'm not so sure that that's not it. Maybe then we see the bounce. Okay, Apple's reported, the damage has been done, all the bigger techs are out of the way. Let's start the repair process, and maybe that's what we see. So those are my scenarios for you to think about going forward. Once we get up above all these areas here, then we're definitely into bullish territory. We can start looking at some trades. Here's the deal. Are we going to make new highs? I'm not sure. Skipping to a daily, take a look at this. Shoulder, head, shoulder. This was perfect. I have no idea why stock charts didn't save this line. It saved it, didn't save it straight up and down as I put it in there. But anyway, you get the idea. We've more than hit the target on the head and shoulders pattern. Into the what? Yeah, the 200-day moving average. This is why I'm watching it so carefully on the Dow as well. We are already into it down here on the NASDAQ. And breaks below it, yes, we could see 2625, 2600, 2570. You bet. You bet we could see some of these lower levels yet before we're done, especially if Apple does not report well. So we'll see what the markets do tomorrow. I maybe wouldn't be surprised if we saw a bit of a bounce in the NASDAQ tomorrow, just in anticipation of Apple. We're at the 200. Yeah, maybe see a little bit of a move up or move sideways overall for the day. And then after Apple earnings, that's I think going to be our test. The push down here though, definitely into a downtrend now. So breaks back to the upside. Guess what? Yeah. All eyes will be on, are we going to make new highs, or is this thing going to roll itself over? If it does, if this thing rolls itself over, guys, and starts to head back down, guess what? We may have seen the high right here. This could be not only the high of the year, this could be the high for the next few years. I know, as crazy as that sounds. That's maybe a little bit drastic. I might be going a little bit over the top with the bullish side of things. I understand that. But the point is, this could be the high for a very long time. That's why all eyes will be on this bounce if and when we get it. Well, we'll get it. It's just a matter of when. So I'd be watching for things after Apple to maybe turn around, if they haven't by then. Okay, the weekly, same thing. Look, we already broke the 20-week moving average. We closed there once. Are we going to close there again? Big deal if we do. Really, it plays into the Bears' hands pretty nicely. I like to give the Bulls a chance to pull themselves back up and get back above these levels, so we still have a couple days left. If Apple reports well and the market bounces anyways, we could definitely make it back up to or above this area. I'll be watching that closely. These weekly charts are becoming extremely important now, especially for people that like to get in and sit in trades for long periods of time. You need to be watching this type of stuff. This stuff's getting important, so I'm doing a lot of talking about this in the subscriber videos right now because it is really important stuff. The SPX 60-minute, same thing, drove itself down, but look, we're not down that far. 4 points here, a couple points there. I think the Dow took the biggest thumping today. But overall, nothing too major today. But over the last couple days, nothing but moves to the downside. This 1430, 1425 area was broken. That was big. Same type of thing. We were in a channel. We hit the bottom of the channel. We bounced. It looked like, well, maybe the bulls have a shot here. No. Dropped right straight down and through. The earnings are killing it right now. Watch your bank earnings. Watch your other type earnings because the techs are getting destroyed at this point. Okay, not serious about this until we're back above these moving averages. Then maybe we can start talking bulls. But until then, take a look at the daily. And we have broken this channel. Remember how we love this channel here and all along here. Little throw over here. I said not uncommon to see this. Right back into it, and what happened when we revisited it? Exactly what I told you. It's going to probably hold. Sure enough, it held again, and we ran away from it. Now, we went back to the bottom, and after yesterday's close, I would have probably expected to see a little bit of a push up, and we did, but it didn't last all day. By the end of today, look, we're back below this channel. Now I can cheat this line and try to make this all fit, so I'll give it a day or two to see exactly what happens here. But I'm telling you, this breakdown and below this channel, das ist nicht sehr gut for the SPX. A lot of these are breaking down right here, and I'll tell you what, not looking good. The bears are really doing a good job. I guess I shouldn't say it's not looking good. It's not looking good for the bulls. If you're bearish, it's looking great. It's looking awesome. And I love to play things short. I'll tell you what, if you guys don't know how to go short the market, let me highly recommend the mentoring course, if not for that point alone. Understanding and knowing how to go short the market is incredibly important, because as fast as or as much as the bulls will move things up, the bears will move it down way faster than that. You pay any kind of attention. Look at this. We were stuck in a consolidation for quite a few months. Now, over the last 5 days, we've basically erased 1460 to 1400, which, by the way, is my next lower level of support. This 1400 level's big, and if we break that, could we see the 200 day? I don't know. It's quite a ways away on the SPX, but the other indices are starting to sneak their way down into it. So at some point, I would not be surprised to see the SPX make it as well. But the bears have drugged this thing down the last 5 days, almost 60 points. It does not take them long. It takes the bulls forever sometimes to make 60 points. And it takes the bears, a couple of weeks, whatever. We'll just wipe it all out and be done with it. When people get scared, panic selling, there's nothing, I'll tell you, to be quite honest, there's nothing better than panic selling. Because if you're short the market, it's a no-brainer trade. Once you're in, you're like, oh yeah, this is good. You just watch it run. So there's a lot of value in knowing how to go short the market. If you don't, you have to. It is pretty important. If you want to be a serious trader, you need to know how to do that. You've got to play both offense and defense. You've got to know how to play both long and short. It's important. So anyway, 1400, next major level of support down here. The VIX spiked hard. 1, 2, 3, 4 days back above this channel line, sitting up here in this upper range, and you know how I feel. Above 20 starts to get a little bit more on the scary side for the markets. This shows a lot more fear coming into the markets. Here's the weekly, same story. Back above 20. That's still, now we're still only at 18, which is a considerable move from 13, obviously. But back above 20 is now where I'll really start to hammer on the bear side of things. So I'm watching this. I'm watching this pretty closely. Let's see where we close that out by the end of the week. Real quick, FAS and FAZ. We had a break above 118, but it did not last long, and it tumbled and tumbled hard to the downside. Now look what we've done. We broke this lower line of support. We've come back, we've tested it, ran away from it again. We're trapped between about 111 and 107, 107.50, really. This is what you're looking at going forward. If you want to take trades, you're looking at a 107.50 short or a 107 short, something like that. Keep in mind that we could be looking at a short-term bounce coming very soon. So you want to be cautious of that trade. I'm not saying don't take it. I'm just saying if you do take it, you got to manage it. You have to manage that trade because we are, I think maybe getting down into some lower levels here. We just got to use some caution. However, back above here, back below here, that's going to be your move on the FAS. Here it is on the daily. Look at this huge trend line. This thing goes back to June, people. Pay attention to that. We are months down the road, and we're finally starting to see some weakness here. Will it break it and hold it? I don't know. We're right there. we're really close. So watching this 50-day moving average very closely at 106, but those breaks of 107 and such, still good opportunities to maybe try and grab a little bit to the downside. Back above 111 gets you back above the 20-day, and it could salvage things for a little bit longer. But this line is coming into play, and it's coming into play in a big way. So all the way back to June, this is a major one to break if it does. Then, of course, if you prefer FAZ, it's just everything in reverse. 1760-ish up, 17 down. These are the areas you're watching. Same thing. Broke this line, came back, retested it, bouncing now. So back above here, good long. Back below here, good short. On the long side of things, go ahead, take it, take the trade, but manage it. Manage it. You might want to use a half position size or something like that, but manage it. And here we are. Remember this huge channel that goes back months and months and months? Guess what? Same story, different verse. We got back below 16, but it didn't last. I liked it short below 16, but it did not last. The next day it popped back up and out of this stuff. Now we could be on our way to the upside here. Very curious to see how this week ends and where we go with this. But I do still like it above these levels that I gave you on the previous chart. That wraps it up, guys. Okay, newsletter. It's done every day except for Saturday. It's 28 bucks a month. It's $1 a day. Come on. You want some help in your trading, or you want some maybe an idea, hey, I think this is how it's going. I wonder what Brian thinks. Well, you can find out. 28 bucks a month, $1 a day, super easy to sign up for it. And by the way, the way it's done on the site is it'll ask you for a PayPal account. You know what? If you don't have a PayPal account and don't want to set one up, you can call me. We can do credit card over the phone. You can send me a check. Some people send me bank checks. I don't care. Really, there's a million different ways we can work this out. It doesn't have to be done through PayPal if you don't have a PayPal account. Just call me about it. The other thing is the mentoring. You want to take that next step, start doing this maybe on a more full-time basis, or you just want to be more consistent at it. In this economy, this is a good way to try to earn some extra money, but I'm telling you, it's very, very difficult to do if you don't have the right education on how to do this. It is very difficult to make money in the markets. For those of you that have been trading for a while, you know what I'm talking about. You know what I'm talking about. So if you want to learn more about how to do it, what I look for, my whole mentoring course is a really good way to get you started on that. Write me about it. I'll write you back. We'll see if it's a good fit for you and where you're at in your trading career right now, and see if there's a match. All right, guys, leave you with that and see you in the next video. Bye.